Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. I'm your co-host Joel Elconin, along with Dennis Dick, and we have Tommy Lackey Jr. on the line. He's a founding partner and CIO of the Barber Lackey Financial Group. Tommy, how you doing on this Wednesday morning?
Morning, guys. I'm doing great. How are y'all doing?
Good. Well, I've been waiting for that breakout in the S&Ps. We held that tight range between 2080, 2095. Busted out yesterday. Is just the buy signal for the Santa Claus rally to end the year?
It's certainly starting to look that way. One of the things that I put out on Twitter and StockTwits last night and this morning is that it's really not just the narrow rally everybody was arguing about off the lows. It's really been broadening out over the last 2 to 3 weeks. And last night was a great example as we had I do my own advanced decline line, my own universes, things like that, and of over 3,000 stocks, that hit a new high for this move, not an all-time high, but a new high for this move ahead of price. And so we are seeing breadth lead price at this point, which is a great sign. And, you put that with things like a good intermediate breadth indicator like the McClellan Summation Index, which is now starting to move back ahead after a slight pause last week as well. It's just everything's starting to really shape up a little bit. So we could certainly still have a little bit of tax selling at the end of the year or things like that between now and the end of the year. But I do think that things are looking much better if we can hold kind of how we started playing yesterday.
I think today's a big day, because you had to break out yesterday, right? And to me, it's a bona fide breakout above the resistance. The 2-day move that Dennis talks a lot about today. I think today we settle above 2,100. I think it's going to be hard. The only thing I kind of thought this would be a little bit of a more of a range-bound market until Friday. I thought with the unemployment number coming out that some people might have a little position squaring, but it looked like that. The end of the month or the beginning of the month buying, all those new plans and the money being just they had to put it into the market, and it had a nice day. Let's move on to your nitrous scan here, and
Okay.
the first stock you saw yesterday, RLYP. Tell us about it.
I just thought that was an interesting one to pop. I heard some people talking about it on the stream. It's not something I'm familiar with from the company side. It's small biotech, but it really started to shape up over the last or off the lows mid-October. And at this point, if it can move its way over 25 or probably 24 and a quarter, 25-ish, I think is where I had it down. You're getting into that point where it's moving above all the volume at price, and you have a big vacuum all the way up into the low 30s, which was basically the breakdown point prior. So it's really shaping up on the daily and the weekly as well. You have the MASBD turning up, and it's back above the middle Bollinger Band. So getting over 25, I think, would probably be a stronger signal if you want to wait for a little better breakout. But for right here, I think that you could start tiptoeing in.
This is a Rob Hood looking chart here, is really what it is.
It is. Too bad Rob's not with us this morning.
He's not with us this morning? Okay.
I didn't see him in the chat.
All right. Maybe he's working out here before the market opens. And he'll listen to the show on SoundCloud, I'm sure, afterwards. Okay. Let's continue here with the nitrous scan. You have it. MXWL, small electronics play. Moving out, short float here. We looking for a short squeeze in MXWL?
Well, I always like to look for that. I mean, it can't hurt. And this is something that's been down here below the $8. That's the only thing I don't like if it's below $10. It's at $7.50 now. I prefer for things to be above $10 because I think that's really where you start getting your institutional support there. But it's had a nice base basing out most of this year, and if it can get back above that 8 level, for those who want to be a little patient, maybe let it flag a little bit, but it's just been a stair step. It's been higher highs, higher lows, higher highs, higher lows. It's just continued to act really well. Yesterday's strong move didn't hurt, and its volume footprint has been really good, especially if you look at it on the weekly. Now, it's not huge volume at 329,000 shares, but again, under 10, 329,000 shares, you take that into consideration. But outside of that, the chart's really shaping up, and it's got a wonderful looking, what I call a mushy RSI. which means
Mushy
it just keeps
R's.
up.
All right, you know what? We startled Rob Hood here, and he is in the chat. He has been bearing down in his charts, and he wants Tommy Lackey's opinion on three different issues here. The first one is LH. Is that Laboratory Corp of America, LH, or am I wrong on
Yeah,
that one?
it is Laboratory Corp of America Holdings. Great looking chart on all levels. I mean, the weekly chart is shaping up real well. It's just kind of either a larger flag or a little more of just a sideways to down move. But that daily just has been consolidating all of November and just broke out to start December below the bigger breakout. And these are always nice to see as you have these what I call kind of internal breakouts, which are small consolidation breakouts before a much larger weekly breakout, which would be over about 130-ish. But right here, it's one of those areas where you could have a partial here, anticipating that breakout around 128 to 130, and then once it gets over that, you can add the rest, and you probably have a pretty solid move ahead of you. Great chart, Rob.
Yeah, it gave you a couple shots in 120 here. Only one time you would have taken some major heat into the 119 handle. And you're right, you did clear the 124 and change level. Something to keep an eye on as well. Another issue coming from Rob Hood. Is that WMGI there? Yeah, WMGI.
M as in Mary.
Yeah, am I right there, Rob Hood?
WMGI. Yep. Wright Medical Group. This one's not quite up there at the highs, but you're seeing its weekly turn up. The MACD is crossing. You're still in an RSI bear range, so you want to be a little careful from a longer-term perspective. But to get started, moving over 23 would be a nice breakout here. And then you got some room up to 25. You watch that at 25, and then basically next thing would be those highs around, or probably 27 and then 28. But you've got some definite room here. Good looking.
I like the 23. I mean, these are, I'm the kind of keep it simple here. 23 to me, that just stands out. WMGI, if you're trading this at home. I mean, look at that. 22.96. That was your high on Tuesday. 22.94. Your high on Monday. And then go back. You got a few other reference points here back in early November. A trio highs 22.98 to 23.14. So closed at 22.78 here. Let's see if we can get over the $23 level. Another one coming out.
Rob,
Go ahead, Tommy.
Rob does a lot let me tell you real quick. I think Rob does a lot what I do, and he basically looks for, again, you look for the smaller breakout first, and then you ride it as long as it'll let you. You just continue to ride those technicals as they move. So if he can get them in here early, he's doing a great job.
Now, this is not such an obvious Rob Hood chart here. We pulled off from the 955 here in EVC. Kind of bunching up, though. It looks like someone's picking on this thing at 850s. It got the mojo to get above it today.
Well, I don't know if it'll get above it today or not, but I think I see what Rob's seeing. And if you look around, basically, it's right around 870. You have a couple of prior highs right around 870. And if you look at those highs to where that was really the shelf before it had that little breakout and then failed, it came right back down to there early October. You clear back over that 870 level, and you're probably going to be back up to those highs really quickly.
Okay. All right. Going back to the nitrous scan here. Nice looking handle on UTHR after the recent base. Tell us what you like in UTHR.
Yeah, UTHR, again, it's a healthcare. It's a major drug player. And you can look here at I said handle, but, some people might even call this an inverse head and shoulders. Got a kind of an ugly right shoulder. But looking at this, or left shoulder, but looking at this particular chart, it cleared yesterday. It's another one of these almost internal breakouts where it clears this level, and now you just start looking at levels like 170, 180. In fact, you see that these previous peaks are almost on the $10 increments. So you can sit there. If you're an options player, you can really start tagging this thing down.
And, let's see, if you're looking for that 170, 180 level, I mean, what are you willing to risk down to? I mean, your risk reward here, you're at 160. Where's the danger zone on the downside?
Well, danger zone really doesn't come in until you're in the 140s, but if you're only looking for, or 143-ish, but if you're only looking for 170, 180, that's too far. So I think on this one, if you try to take it here on the breakout, you put your stop under yesterday's low.
Okay. All right.
Or at the lowest point, you'd put it under the 21 EMA at 149.95.
All right, another one here. I believe this is on the nitrous scan. LDL. What are you looking at in that, Tommy?
LDL.
Oh
Okay,
boy.
LDL is a same kind of thing. Is that it's already ran really hard on the daily and then rested for most of October or November. And so basically, I think if it makes it back above right around that 38 level, I might give it a few cents. Or really, the previous high close up there at 37.75, I think you're going to see another leg in this guy coming. That tail up there bothers me a little bit, but it handled this pullback so well, and the volume footprints are still pretty solid. So I would say over that you could give a shot.
And another one.
Again, today,
Go ahead,
yesterday's
Tom.
low is your shot.
And another one, prepping for a breakout here. TBI. Let's see. It was the biggest mover yesterday off the list, which was huge last night. TBI. What do you got on that one?
Okay.
Gap.
TBI.
Yep. Gap and go. Kind of consolidating here. Can it clear $30?
Thank you. I'm trying to get my chart up, and that's exactly it. I mean, basically, you can see that $30 goes all the way back to the April-May area on the weekly. You had a little bit of a bump above it, and then it came back down. So I mean, you clear $30, and I think this one continues to run for you.
In your note here, you said that you're listening. Nitrous Scan, got huge, and there was a lot of big names on there. Do you notice any correlations, like when that list gets too big or too small, that might signal a reversal in the market?
Yes. Basically, what happens is I combine it a little bit. I think I put in there that we didn't see a lot of momentum, overbought momentum in the major indexes, though. And then that's what I look for is when I start to see a momentum getting overbought in the major indexes, and then I really start to see this list get huge. I said it was huge, but it was probably around 100 last night. It's gotten up over 200 stocks. But that's a 3,000 stocks universe. So over 200 stocks is a little less than 10%. Once it gets over 200 or so stocks, you're really starting to get stretched out in the very short term. But it also means the long term is still playing pretty well. So it's really, for this one, if you're looking at it, say it's overheated, you have to look at it as a very short term, small pullback thing. Where I really start seeing big advantages in this one is it gets down to 2, 3, 4, 5 names under 10, then we're real close to a bottom. So it's a better bottom indicator than this top.
Tommy, I want to ask you about the FANG, Facebook, Amazon, Netflix, and Google. Google hit a new all-time high yesterday. Amazon is within striking distance. Netflix is within striking distance, and Facebook too. What are your thoughts here? Do you think you could see all-time highs here by the end of the year in all of these stocks, and will this propel the market forward?
Do I think you can? Sure. Is there anything here that could derail that? I mean, it might be hard for, I'd say to some extent I can say it might be hard for Apple because it's got that gap and some other things there. But Apple's one of those that if they decide to buy it, it's going wherever it wants to. So it could get back up there quickly. But the reality is those have performed really, really well. I'd love to see them at all-time highs, and there's nothing there other than maybe Apple that's telling me to sell them right now.
Okay.
But it's still a scenario to where I wouldn't mind if those took some time off and some of this broadening continues to happen. Because I think that would be more healthy for the market than just those four being runners.
Tommy, before we let you go, give us your Twitter handle.
All right, it's GT Lackey, GTLACKEY.
Okay, and Bobby bid here. I don't think he's really convinced, and interest rates are going up here. He's looking at the TLT here and the 120 February 16 call on the TLT here. I mean, kind of going against conventional wisdom here with interest rates supposedly going up here. What advice do you have for Bobby bid here on the 120? Nice move in the TLT yesterday.
Yeah, I agree with him. And, it's one of those areas to where they could certainly raise, but even if they raise a quarter point, I don't think it's going to have a huge effect other than the quick shock. But I agree with him is that there's no real good reason right now to raise when you look at a global economy and the way we're playing in it. And I think that's what you're seeing in that. REITs are still handling things pretty well. And so that's one of those areas to where I would expect if we were really going to raise rates, REITs taking a little more of a hit. And then also utilities have been not as good, but they're holding up okay. And they're one of the ones that are probably going to be most sensitive to it from the stock side of things, is utilities. just because they take the hit both on the side of they won't be the interest rate, chasing play anymore, and also utilities tend to carry a very heavy debt load. So if interest rates go up, that hurts them on that side too. So they kind of take a double whammy.
We've been on the line with Tommy Lackey Jr. He's a founding partner and CIO of Barber, Lackey Financial Group. Tommy, thanks for going over your scans with us. We appreciate it. We'll keep an eye on the stocks you mentioned.
Thanks, guys. Y'all have a great week, and I'll talk to you next week.
All
Thanks,
right.
Tommy.